Friday, October 13th, 10:57 a.m. New York time. Good morning. This is a review of my day trade I did this morning. It's a scalp. It was using the futures on the currency market on the euro. Yeah, you could trade the futures market in different exchanges. Forex is one exchange, which is just for currencies. The futures markets, which offer many categories, one of them being currencies, as well as the equity market. So we're looking here, a 3-year chart, each candle a week. So you can just see a perspective. This is the high for the past 3 years in the top left. And this is the low for the past 3 years of the euro. So we're inside that range. Take this to the year to date. Here's the high for the year on top. Here's the low for the year. The low for the year was made last week. The current candle for this week is red, but it has a higher high, higher low than the prior week. And the current body, or the current price is below the body of the prior candle. Yep. It's rejecting there. Big wick on the top. Again, the candle won't be done till the close of business today. Let's go look at the daily now. We're on a year to date. There we are with the daily. Zoom in a little bit. Again, last week made the low of the year, which is a yellow horizontal line. And the current candle for the day is red, lower low, lower high, trading below the low of yesterday. Yesterday was a pretty big body on average. Yeah, it has a little wick on the top, but big body. So I labeled the midpoint right there. To me, that's important. If you've been following me long enough, you know what that means, especially on the higher time frames. Let's zoom in a little bit more. So you can see this huge consolidation, this gray area. We had a pop above it a few days ago. That was a green. And then we had the higher high on this daily candle yesterday to reverse and take out that low. Again, doing a retracement, deep retracement yesterday. Got it? So it was a pump and a big sell-off. There we are now. So let's take it to the intraday on the 4-hour. 5 days, each candle's 4 hours. The current candle started at 9 a.m. and would be done at, started at 9 a.m. and would be done at 1 p.m. today. And again, we see the current candle, big body, selling off. So it's interesting. Yesterday, you had all this selling, panic selling. Overnight, that reversal, pop, filled to retest that midpoint of that candle, as well as filled to go back in that daily midpoint label there, as well there too. Yeah. What a pump and dump. Not saying the product is the trading period here was. Yep. Again, here, this big candle and this big candle, big wicks on the bottom, labeled it as a demand zone where prior buyers stepped in, which is also above quarters. See that red dotted line, quarters, very significant number, potential target on the downside. And we're trading below a big round number, 5500. Let's take it to the 1 hour. So each candle is 1 hour. We're looking at the current day. Again, a lot of whipsaw up here and down here. Look right here now. Let's take it into my trade. Actually, let me show the 15-minute. So here's the 15-minute. Identify the overnight, Asian session, London session, reverse. So again, reverse, retracement. All this was trend down or retracement, failure, another trend. Again, very nice trending today for several opportunities. Again, because this was a big retracement down. To me, I'll be looking for the bearish setup on a retracement. Bingo, inside candle, broke below it. Nice trade to be trading bearish if you're using the 15-minute candle for your setup and your entry. And then we got that dump. Now let's look at my trade. We're looking at 5-minute chart. And right here, this red candle, going to zoom in. We had a consolidation here. Zoom in some more. You have this top which happened to be the 1 hour high. And then you had that sell off right there on those red candles. So I was looking for that retracement. So I noticed these 5-minute candles here building a consolidation, a lot of overlapping. I labeled the low right there, which is the 5-minute low. Big wicks on top of these candles, a lot of rejection on the upside. So my idea was on a break below that, this consolidation, which is the bottom of that 5-minute candle, was to look to trade bearish. Potential targets, big numbers right there. Potential target on the downside. But I needed to be concerned because this big 5-minute candle was an impulse move up, and we might only get to midpoint there. Let's take it to the 1 minute. Okay, so this is my setup on the 1 minute. Zoom in. Some more. There we go from 8. There we go. 1 minute candles. And this area was those 5 candles, which is 5 minutes. And that was the low of it. Went up, popped up. Look at that. Bearish pin bar. Rejection. Nice rejection. I did not go short there. Nope. And we have this consolidation. And that bearish pin bar, if I went short, yeah, maybe make a few ticks. And then what happened? Tight consolidation. I was hoping to catch a big trend. So my concern was going up short there. We may have a retest back up there again a few times. So that's why I didn't go short there. Forward. We broke below the swing low right there, which was again from the 5-minute setup. I'm going to look at the 1 minute chart. So I went short. That was at 0909 in short at the price 1.0558. And it was nice. It was a smackdown real quick. Let's go forward. Pins going lower. I'm still in the trade. This green candle, as soon as it came, I was concerned that we might have a reversal. And what I did was start moving down my stop. So I moved my stop below my entry. So at least I could have a break even or make a ticker point. I mean, have ticks. Again, I was still bearish bias here. Make sure you're on the 5 minute. Okay, my entry is here. So long as we still have that momentum down, I was watching the 5 minute too. Let's put side by side. As long as we have that continued momentum, that helped me want to stay a little bit longer. Remember, down here was one of my targets I was looking for. So zoom in some more over here. On the 1 minute, as we went lower and lower, again, I was concerned right there. We might have a reversal. Small red candle. That was concerning there, this small red candle. Because I'm thinking, okay, the bears are getting tired. Bunch of wicks on the bottom. Again, we might pop up. But I was thinking, okay, I'll move my stop down more. And if we take out these 2 high candles here, I'll close my trade for a small profit. Yep, we went lower. Nice. And look at that, went even lower. That was very nice. My gains were getting bigger. So this was concerning because I have a big wick on the bottom, big wick on the top, small body. And also we were to test this prior day's low down here, that candle. I'll make it white, yellow. Again, I changed the colors after I get done with the trades. They're not as important to, still concerned, but not important. But that was a prior day low. That was another thing I was looking for down on the downside, if we could retest the prior day's low. But that kind of candle is questionable. It's almost like a dodgy. Sometimes it means interpreted as halfway point of a trend as potential reversal. We'll see how this one worked out going forward. And reversed. I closed the trade right there. Closed the trade at 0916 for a profit. And each pair made 5 ticks. Happy camper. Did good. See, I'll continue going here on the 5 minutes. We can see here on the 5 minute, it closed green. And then look at higher highs. Again, my gains would have been getting eroded. So glad I closed my trade here. Yeah, left a lot of money table on here. Let's go here in the 1 minute. Look at that. After I closed right there. Yeah, then I made a new low. Or just shy of that new low there. and lower low. Zoom out a little bit more. Here we go. This was that's what I want to show you right there. That was, again, the setup there, went short there. And when I closed there, I left quite a bit of money on the table. Big consolidation there. Let's go here in the 5 minutes, see how it looked. So again, when I close there, you see this huge whipsaw over here because at 10 a.m., there was also economic news. So I had a big volatility. But again, I was concerned up here when the 30-minute got drawn, it would go up there. So good. It was right there, in and out that trade and all that whipsaw. Got out before that news. So another setup I was looking to do was right here. I had this already set up. I was considering doing a bearish trade up here. But at the time frame, I was very concerned because it was near the 10 o'clock news. And I don't like to trade 5 minutes into the news nor 5 minutes out after the news, just because of so much whipsaw. Let's show you here on the 1 minute. And the setup was right there. And on the 1 minute. So you saw that 30-minute midpoint acting as a supply zone. Bunch of sellers up there. Then popped above it, rejected it. That was a 957. So I was already in that 5 minute window. I did not want to trade. I was bearish bias, looking to trade bearish, but I did not want to take that risk because, again, see these huge spikes? That could go on the upside as well, too, and then go back down and hurt my gains. Yeah, not good. So best is out of my hand. Anyway, look at that. It would have worked out. Would have, could have, should have. Yeah. Big move. And that big move there, just think if I had gone short here. If you look here, the distance from there to there, nice. But the distance from here to there was a lot more. Yep, could have made a lot more. That's it. One trade I did today. Happy camper. It's Friday. Done with my Friday morning day trading session. Now I have the rest of the day to enjoy. Thanks for watching.